In the last 24 hours, one of the most circulated Smci stories was a Motley Fool commentary, reprinted on Nasdaq.com, which argues that Supermicro is positioned for high-volume AI systems and that certain new product introductions could re-accelerate revenue. It's headline-grabbing and catchy, and it's the kind of analysis that gets shared in discords and group texts because it's short, bullish, and easy to digest. But it's worth remembering the difference between opinion content like this and company filings or audited results. Commentary can move sentiment quickly, but it is not the same as signed orders or shipping manifests. Treat it like a good rumor, interesting, market-moving, but not definitive on its own. Why this matters: when retail and some momentum traders see a headline that says, high volume, they immediately start imagining tens of thousands of rack shipments and multi-quarter revenue acceleration. That optimism can push price even before contract paperwork hits the table. Which is exciting until it isn't. Let's be blunt, a Motley Fool piece is valuable for framing and conversation, but investors should prioritize company filings, PRs, and confirmed customer orders when sizing trades. Supermicro's investor relations feed is the place to check for real operational signals, and lately the company's most prominent update was the December 9th press release expanding the NVIDIA Blackwell portfolio with new liquid-cooled HGX B300 systems that the company explicitly said were ready for high-volume shipment. That press release is the kind of thing that translates, over time and with customer sign-offs, into revenue. But there's a gap between product ready and factory full of paid orders. On December 9, 2025, Supermicro announced an extension of its NVIDIA Blackwell systems lineup, new 4U and 2OU, OCP, liquid-cooled HGX B300 systems optimized for hyperscale and AI factory deployments, claim to support up to extremely dense GPU per rack configurations and to be ready for high-volume shipment. The PR emphasized direct liquid cooling, DLC, tech capable of capturing most system heat and enabling high GPU density, an important technical claim if customers want to pack more compute into the same data center footprint. The company followed that with additional product shipping updates in the weeks after, indicating volume deliveries of Blackwell Ultra systems and rack plug-and-play solutions. Why is liquid cooling a headline? Modern GPUs, especially Blackwell Ultra class, generate massive heat. Air cooling becomes a limiting factor for density and power efficiency. Liquid cooling lets you stack more GPUs into smaller spaces without throttling performance. For hyperscalers paying by the gigawatt, that's money on the table. Product readiness is one step, paid and recognized shipments are another. Supermicro's PR language, ready for high-volume shipment, signals supply chain preparedness and validated system design, but revenue follows only when customers sign purchase orders and the systems are shipped and accepted. In the AI server market, customers often do staged rollouts, pilot clusters, validation phases, and then volume scale, sometimes over multiple quarters. So when you hear high volume ready, mentally draw a dotted line from engineering bench to full revenue recognition. That dotted line has steps and sometimes friction. Product cadence, the rhythm of new system shipping, must align with hyperscaler buying cycles and component availability, NVIDIA GPU supply, power supplies, racks, etc., for the revenue ramp to hit the timeline management and bulls imagine. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Now for the money talk. Late 2025 analyst coverage shows 12 to 18 analyst 12-month price targets clustered around the mid-$40, with averages commonly reported near $45 to $48 and some services showing an average in the high $40s, $48.4. The distribution is wide. Some houses have targets in the low $30s, others as high as the $60s, which reflects divergent views on how fast AI server demand will translate into SMCI revenues and how quickly the company can convert product readiness into profitable growth. MarketBeat and other aggregator sites list consensus targets in that mid-$40 to high-$40 band, with the high target often cited in the $60 plus range and the low target near $34. A consensus target around $45 to $48 from a $30 price means analysts see upside, roughly 40 to 60%, if the story plays out. But the consensus rating is often reported as hold, indicating analysts view the risk-reward as balanced rather than a unanimous buy signal. That hold consensus tells you that while many analysts see potential upside, they also see execution, competition, and timing risks that warrant caution. Why targets diverge so much? The model knobs. Why are some price targets low-$40 and others $60 plus? Because analysts use different assumptions on a few key knobs. AI infrastructure demand growth rate. Some model rapid hyperscaler capex, big wins, fast ramps, others assume more conservative adoption curves. Share of wallet. How many racks will Supermicro sell versus Dell, HPE, Foxconn, or local ODMs? Small changes in market share assumptions scale to billions. Pricing and margins. Will SMCI capture premium ASPs on whisper-quiet liquid-cooled racks, or will competition force discounts? Revenue recognition timing. Are orders immediate or phased across multiple quarters? Macroeconomic and supply chain risks. GPU availability and macro spending cycles can accelerate or delay purchases. Think of these knobs like seasoning a soup. One chef adds a pinch of optimism, another doubles the spice. Both taste different. The hold consensus. What analysts mean by balanced upside. An average price target in the mid-$40 plus a hold rating is a common combination when analysts think a stock is fairly priced for its near-term catalysts, but also carries execution risk. A hold suggests, we see upside if the product cadence and orders accelerate, but there's enough uncertainty, timing, margins, legal/regulatory issues, that we're not telling clients to buy aggressively right now. In practical portfolio terms, hold often translates to watch earnings and order flow, add on confirmed shipments, not on chatter. The bullish long-term forecasts, $40 billion revenue visions and caveats. Some of the more bullish long-term narratives point to $40 billion revenues by FY 2026, a number Supermicro has used in optimistic guidance in the past, and even higher in subsequent years if AI infrastructure demand explodes. However, it's crucial to put that into context. The company at times adjusted or tempered earlier lofty forecasts after quarters where GPU supply or revenue misses occurred. Those headline targets are powerful magnet headlines, and they drive some analysts to set high price targets, but they're also laced with conditionality. If NVIDIA supply improves, if hyperscalers sign large contracts, if margins hold. Markets that priced in those upside scenarios earlier have sometimes had to re-rate lower when reality took a slower path. So the $40 billion dream is alluring, but it's a conditional rocket, not guaranteed fuel. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today, your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.